Hi, this is Steve Hodgson from Modern Asset Management, and I'm here with Nick Curry, and we're going to talk today um, uh, about a little more global issue than the usual details we get into. But if we run out of stuff, I've got a foreclosure happening today. That's always worth a little discussion. But in the meantime, we thought one of the things that Nick and I have been talking about is, well, another chat message. Hang on. Um, all right. All right. So if you're having trouble hearing, I suggest you go back and, whoops. I suggest you go back and just come log back in. That's sometimes it takes that. So Nick and I were talking. We've got this pool of, I don't know, a couple dozen mortgages, half a dozen properties, bunch of unsecured loans, hundreds and hundreds of those. And we started having this conversation about, well, what happens if 2008 happens again? What are we actually ready for it, or have we forgotten? Um, I lobbied and made a case that holding a bunch of mortgages at a 10% coupon that I'm yielding 12 is will hold me in good stead compared to the destruction that happened in 2008. But then I got to thinking that, well, I've got 5 foreclosures working right now out of a pool of 33 subprime loans. That are now down to a couple of dozen through payoffs and sales and whatnot. I've got 5 that are in active foreclosure, and so that gives you pause. I had one borrower who is just a genius, and he's managed to stay in his house now. 5 months past the eviction date. Um, so I just think it's just so I give him credit while he's making me just nuts. He convinced the deputy to go away on a lockout day on August 1st, and I've never seen that in I've never seen that, and I've been doing this a while. Anyway, so back to work. Local trends from big data, and Nick titles this "Where is my market heading now?" And that's really important. Like I said, we've got stuff all over the country, and it's very different. It is very different. Um, uh, the foreclosure that the lockout that got undone is Ohio. The foreclosure, I've got 2 foreclosures. One went to auction today in Michigan. I got 2 in Michigan. And the other one that's working its way through the pipe is in Louisiana. Um, so, um, and we're gonna go. We're gonna go and let Nick take this a little bit. I want to let folks that are signing on that are new to Zoom know that you're automatically in camera mode, and maybe I should change that. So make sure you're on your toolbar. You can stop your video and you can mute and unmute your microphone, and we'll get to that in a little bit. But in the meantime, now we're open. And Nick, why don't you tell us what you think?
Steve, would you unmute my other line?
Oh, funny. Okay, hang on.
Hodgson for a while now, and close colleagues for nearly a decade, and been joining him about half the time on these webinars for 2018. So I'm sure I've talked to some of you, but I will share. Let's see. Do you want to pull up the PowerPoint, Steve, or share the screen? Or you could let me share, and I'll take it over. Yeah.
Okay. All right.
That's great. That's great.
Right. You want me to put it back? You gonna share your screen?
Yeah. There we go. So a little bit of a macro look, as Steve kind of said, and the perspective we have looking kind of all across the country is from a bunch of different angles, and it really depends on what our investment strategy and target is. The appreciation game is nice when you can just sit back and let any asset appreciate on its own just to natural market demand. But for many of us out there, we rely on the cash flow and the factors we can control to be the most reliable and investment strategy that we go out and we seek. So, depending on where you're located, you could be in a area of high appreciation, like where Steve and I are located in California. The appreciation is back above record highs, and we're looking at other areas, specifically out in Pensacola, Florida, where Steve has talked about before, that modern asset management is invested, and we can buy 3 single-family homes for what you can buy in California. So, where are we now, and where we think we're headed in 2018-19? This should give some insight and give you guys some resources that are our favorites that you can do your own market research, and thought they were pretty valuable to share. And this was a quick snapshot of just the Google search real estate market. What are the top stories that come up as of this afternoon today? It was that Redfin had released annual reports. I think maybe Zillow did as well, and Redfin had pointed to their research that suggested weakening real estate market, while weakening from the strength that we've had, no surprise to anybody. But the middle article there, Seattleites, I thought that was interesting. That was one of the top articles that came up. But Seattle has obviously been a very hot market, and certain cities within Seattle that are hotter than others, sounds like, are the focus of that article in particular. But the buzz for this year, Steve and I have really started looking at our, the 2-3 year horizons. Are we smart putting money to work now? Are we better off putting money to work, in 2 years from now? And I think that really depends on the market and, again, the strategy in which we're after. So if we think we can buy California real estate cheaper in 2 years, 3 years from now, why buy it now? So the interest rate hikes, I think we all know, are inevitable. And I think what I had last read was the Fed suggested 2 interest rate hikes this year. We're still at these low inflated level, artificially held levels that are going to cause some reaction when they increase. But I wasn't around the time when interest rates were double digits, and that I think has a lot of room to go until it really creates a 2007, 2008 effect on the real estate markets nationally. So the looming factors, obviously being one of them. I was reading about housing starts as 2017 being some of the best years the developers have ever seen. They've sold out of land inventory. One particular investor was talking about a company in Las Vegas called Toll Brothers, I believe. They had everything sold before it was built, and so really they're looking for land and looking for opportunities, as many of us are. Where can we find a risk adjusted return and today's market, and it's a couple unique angles that we in particularly really like, where there's government regulation easing, and there's one particular thing that Steve and I have recently been exposed to, called opportunity zones, which are designated census tract areas from the IRS. And Steve, if you know more about that, you can maybe go into detail on that, but that could lead into the next slide about affordability as well. And then I'll pull up some of the Redfin data on the local level for some of the participants to see different markets and how you can pull data on your own market and what you could kind of be looking at.
Yeah, so I'll just talk about what comes out of the opportunity zone is government assisted purchasing for rehab, new construction, and it's all over the country. It's not just one section or one little part of the country. We've got somebody on the phone on the call from Escambia County in Pensacola, where we've done some projects, and I wouldn't have to tell Eric what neighborhoods those are. He could tell me what neighborhoods those are. We're looking in Los Angeles right now and exploring where those maps cover, because I think there's still a fair amount of run in the LA market and trying to identify path of progress. I tried a path of progress play 12 years ago, and turned out that I missed it. I was on the wrong side of the highway, and it took me a long time to get that project right. So I'm hoping to use that experience to figure out the right place.
Yeah, and these are relatively new laws that were passed as well, and I'm not sure how many investors have been talking about them, but as you can see on the IRS FAQ page, that there were certain opportunity zones out of the tax code just as of December 2017, and then the first set of opportunity zones covering parts of 18 states were just designated in April 2018.
Right, and in past years, we saw hardest hit funds, and each state and location could use it for their own what they thought was best for their community. This is tax credit money, and that's and so I've been trying to, and with some success here and there, to have the government help pay for real estate, and we're going to try to continue that. But it's what we're going to chase after we're done chasing the couple of things that are right in front of us that are demanding our attention, like these foreclosures that I'm working on. So. All right.
Yeah, so there's some unique questions in here, and we can distribute the link out to everybody to read more about the opportunity zones, but that's something we're looking into, and we share more information as we learn, and qualify it to be the appealing allure that it seems like it could be.
Yeah. So it's the legislator trying to prop things up, and so we should all help. All right. You said you want to talk about Redfin a little bit?
Yeah, I do. Pull it up.
Your screen did not change yet.
Okay. So first, before I pull the Redfin data,
Oops, you hung up.
Oops, is it back?
Yeah. Okay. Now, you got your sheet up
Okay.
in counties, right? So
Yeah.
So I saw where you were was California and Mendocino, and that's where you grew up. So that's I would think that would be interesting to go look at. And like I said, there's lots in LA. There's some in Orange County, and I know those neighborhoods are going to be in Santa Ana and what they look like. But there's again there's opportunity. So, you can.
Yeah, 880 census tracts in California, and there's about every county on the map here, and obviously even areas like San Francisco, where they're low income compared to the cost of housing. So this list is available. It was June 14th. It was published on the IRS website, and this also says it's not the official list. That'll be published in the IRS bulletin at a later date. So, new program, still kind of rolling out the official details on it, but something to keep your eyes and ears open about. And just wanted to share that. So let's go to.
And we've tried to take advantage of some hardest hit funds money that's come down to the county level in Pensacola, and really had issues getting things through. They had a plan where they'd pay for 50% of infrastructure improvements in a house, windows, roof, HVAC, that kind of thing. And we just struggled getting across the finish line with that. But it's and so we wound up missing opportunity. And again, I'm hoping that learning will help us in the next go around. In one house in particular, we left $6,000 on the table that we could have picked up if we had followed the rules from the very beginning. Oh, yeah, affordability.
Yeah, so one of the metrics that I like to look at, and we're going to get into affordability on the last slide of the PowerPoint first, before going to the Redfin data. But I've found an immense library of published data on Redfin that I have not found consolidated in any other resource really anywhere online that is publicly accessible for no cost. I'm sure there are some resources out there that have data you can pay for. The you don't have to be a spreadsheet wizard to be able to use the Redfin resources as well. And I'll show you some of that as well. In fact, I used it just the other day to take a zip code level snapshot of days on market for an investor that they were asking about. And I really think Redfin does an amazing job compared to even the data that Zillow publishes and the other competitors out there. So we really like looking at affordability. The volatility isn't there in affordable housing, as we all know, and with the emergence of the opportunity zones and demand in multifamily and rental demand, it's too big of an area of an opportunity, I think, to ignore. So that obviously brings into context the rental multiples in an area like Pensacola, Florida versus San Francisco, and they're day and night in terms of what you could buy and the yield that you would be able to get on your asset. So switch over to the data and I'll show you guys an example. So this link we can send out as well. Can you see the Redfin median sale price page?
Yep, you got it.
Okay. So again, all free information from Redfin that you can do by state, by region. They break it down on the property type level, and you can look at how you want to show the values. So I think what I was, I think what I had put into region was just a zip code. And these are cut and paste graphs that were very useful, and you can even toggle based on period. They power this from a powerful data analytics software called Tableau, which does more than anyone could want. But let's see if it'll let me put in zip code. So on your own local markets, median sale price by zip code, you can toggle that directly over to home sales by zip code, new listings by zip code. This is my personal home zip code in Los Angeles, and I do not own there. I rent there for that exact reason. These numbers are of what you would expect in California. Steve, do you have a zip code of the foreclosure that I could pull up as an example on here, and we can look at days on market and median prices?
Yep. Hang on, I gotta jump to a different screen. Go find it. 48092, and this is one. This is in Warren, Michigan, which is a northern suburb of Detroit. I Frankly, I don't know how it's going to turn out. My gut tells me that I missed. I'm not quite north enough of Detroit, and I'm still in tough area. I've got a uh, REO estimate on this property of about $26,000 if it's trashed. Fixed up, the house is probably 75,000. So what you got here? This is
Well, to get that on scale, I got to take California off the graph.
yeah. So this isn't California. This is Beverly Hills, right?
Yeah, that's not California. 48092. Let's just isolate that.
Yeah, but this is such a telling graph of everything's local.
Everything's local, absolutely. And there's everything. 48092.
So this Tableau is you just go to the Redfin site, and this is just the driver that they use is this software, right?
Yeah, that's correct. In a prior role, we bought a Tableau license to actually use it, and you're looking at over $10,000 for the software. Here, Redfin gives you access to it for free with their own data live.
Wait. This is $10,000. You've paid $10,000 for this software, and Redfin says it's free to use on their data.
On their data, correct.
Ooh.
So not you can't put your own data in it. That's what you pay $10,000 for, but you can download it and do your own thing with it on here. But the visualizations are just second to none to anything I've found online. So for this market, price per square foot. What was the
well? That's
the foreclosure?
That's really encouraging, Nick. Yeah. A
single family. Yeah, we were looking at a fraction of this.
Yeah.
Less than half.
Yeah. So this is okay. All right. So good stuff in that market's trading for over 120 a foot. So if the median's 120, my gut says I shouldn't be looking at anything if I'm going to look to buy distressed that's more than 60. And probably down from there.
Absolutely. And days on market, that's pretty attractive.
Okay. So we put the asset at this address up for we set a minimum auction price of 25,000 in a hope that it'll get bid up. But the 25,000 we'd walk away whole. And sale to list is so this looks like a market that has recovered. So maybe I am north enough of Detroit.
Maybe the look at the inventory. Yeah.
Mm-hmm. Yeah, so late as 2014.
2012, 2018. Yeah, about 6 years of data, which we can shorten up if we wanted to.
Mm-hmm.
So all this all this powerful data right here at your fingertips. Any other areas or examples anyone would want to look at?
If somebody has a zip code they want to see us pull up, just put it in the chat. I'm going to look for my Cincinnati zip code if nobody else has got one.
Yeah, I'm going to jump over here to the screen until we get one. So this was
45238.
All right, let's do that first.
Oh, somebody put a couple in. Nope, let's give somebody here 91950. And then Eric wants us to pull one in Pensacola.
All right.
This is National, John says this is National City, California.
National City, California. All homes for sale. We're toggled currently on single family residential. June 2015 to June 2018. If we had in our own software, we could do a trend line analysis, over the time frame. But this gives a pretty good representation that its inventory is going down. So. Sales, seasonal, median sale price.
Yeah, this is south side of San Diego.
Okay.
Relatively high days on market for California. 25. We're now seeing
we could bring in California as a whole as well. Oh wow.
Yeah, that gets a little messy.
The power of data. Oh, it's still what a beautiful painting.
Yeah. That's too much information, right?
Somehow on here you could get it all on the state level, and maybe it's just as easy as unchecking those.
I bet, yeah.
Maybe not.
Maybe not.
Well, I would say probably 25 days is probably a little higher than the average in California overall.
Well, it just struck me because San Diego. Well, I'm seeing, you're seeing stuff in San Diego. Well, I guess that's not. I guess I'll take that back. I guess I'd be looking over 60 days to be concerned. It's just, the thing, like, if it's under $1 million or under $500,000 or 750, it gets snapped up right away, and doesn't take very many multi-million-dollar ones to skew But our big project's been on the market nearly a month now, right?
Yeah, no offers.
Yeah. So if anybody's looking to live in Bel Air, we've got a heck of a deal. It's $7.8 million. So someday we'll tell that whole story, but it has to sell first.
Well, I don't want to get too lost in the data here, but here let's look at Pensacola because that is a relevant market to Steve and I as well. And I'm sure on a lightning fast internet connection on Redfin, this probably moves a lot more quickly. $32507, was that right, Eric?
Yeah, that was right. Well, you could also drill down by going Florida and then picking Pensacola and take a bigger picture. Scroll down and take Gulf Breeze. Let's look in Gulf Breeze because that's the place we've been looking at. Oh, no, you got to go over and choose state first, I think. You're in the wrong. Yeah, you got to go over. You got to take your state column, Florida, and then it'll give you your. All right, it's gonna be part of a bigger MSA. So, no, go I guess, Pensacola.
Pensacola. Surprisingly, not in here.
It's not there. All right, so the data is not complete.
Trying to see if I know a familiar nearby. Try that zip code one more time. See, Eric gave me a 325. 333.
All right.
Well, that's interesting. It skips quite a big chunk.
Yeah. I'll take take that. Take the closest one. Find out. 32656. I'll look up where that is.
All right.
That is Keystone Heights, Florida.
Anywhere nearby.
Nope.
Oh.
Oh.
Well.
That's near Jacksonville.
Well,
right.
in summary, the power of this tool is very robust, and I encourage you guys to all look at your local markets in here for your favorite statistics and use it as often as it is updated. I'm sure update beyond June will be coming out soon.
And being able to get some of those key indicators, is your median sale price moving up and down? Are home sales moving up and down? Are there new listings? That's great. So folks that are buying notes in places that they don't know where they are, these little towns and these little places, and these little houses and little towns, knowing whether or not there's a real estate market there, in the event of a foreclosure and you've got an REO to deal with, knowing if there's actually a market is really important. Says the guy who has one in Alexandria, Louisiana, where there is hardly any market. So.
But a lot better affordability. So you know that there's
goodness gracious,
there's less volatility in the market. Yeah. This was one data extraction I did just to look at a national level. So it was sale price to household income ratio by MSA for largest metro areas, and the one that really stood out to me in the peak, where it was a unanimous peak across the board, was June 2007. June 2007 here. So some of our areas of interest, Pensacola, or ratio of just about 4. When Los Angeles, Long Beach, Anaheim was almost 4 times that in terms of affordability, and Pensacola under the United States average as a whole of just a little above 4, but a really across the board trend here in the largest metro service areas where there was a peak to trough from 2007 to about 2012, and then after about this point is where we started hitting our highs again. So one school of thought, Robert Campbell, that Steve follows closely, looks at affordability as one of his top indicators, and definitely agree. And once this is updated through 2018, I'm sure we'll see San Francisco, for example, just below past this peak of 10.29, where in this time everybody about maxed out. So am I a buyer in San Francisco right now? No, I'm absolutely a seller. But if this was of interest, we'll absolutely update this data and share it next time with some of our more specific markets of interest, and or any that anybody would like to add, we'd be happy to include them.
Yeah, and that's to a larger point. If folks that are joining these calls want us to dive into specific topics, specific assets, or like this kind of economics case, we're all, we're just starting things. We just lead, that's, so we are not, we're not the gurus, we're here to, showing what we're looking at and what our results have been. So, so we're not going to buy in San Francisco, huh? Then why did we start another project in LA? Well, and that's not a buy and hold, right? That's a transactional, doing a construction project and looking to get out, right?
Yeah, I think the 1 year perspective, I don't think can get anybody in trouble right now. We know interest rates don't go from 3 to 6 or 8 overnight. There's a climb and a turn that has to happen, but all economic cylinders are firing, and I think the cover of the Wall Street Journal last month said there's now more jobs than jobless, which puts us at a imbalance in jobs economy. So that was very interesting.
Mm-hmm. So let's open the floor to, if anybody's got a question, they want to raise their hand, want to unmute your microphone, bring something up. We're coming close to the end of an hour. We've been at this about 45 minutes.
Yeah, I have zip code level data from Zillow, from Redfin. So if you don't have 4 gigs of empty space to download it all for yourself, feel free to email me. I'd be happy to share whatever I have for you.
Okay. All right. So if somebody out there wants specific zip code data, they can send you an email at nick@modernassetmanagement.com. And I'm glad he'll throw that. I'm sure he'll be glad to turn that around right quick and show you what he looks at. You're showing this source, and so Mary J's. Let's see. Somebody's typing in that they're having a little trouble going backwards in data, going forward in data. When you signed up for this account, did you have to do anything special? You just signed on. You didn't pay a fee or anything, right? For the Redfin.
For Redfin, no. And then in fact, I didn't even log in. So the URL is right at the top here, and I'll paste it down in the chat. And I'm not sponsored by Redfin. I'm just a obsessed data nerd that has found a gold mine that I would love to share with everybody. So I think they do a spectacular job at making it user friendly, and they publish it from a neutral standpoint. Really the integration to Tableau here is second to none, and paints beautiful Picassos if you filter too many items into one graph.
Yeah. So you want to put that down in the chat so folks can find it, and maybe just put the screen back up again so people can look at it when they look at the video.
Great. Yeah.
I was all prepared. I was all prepared to come up behind you and talk about. Well, here it is: Redfin /blog/data-center. Seems pretty straight, pretty easy to get to. I was going to talk about all the tools that I found on Bigger Pockets, and but this is plenty. This is plenty.
once I figure out how to filter it out by region. Come on. Well, do you want to touch on bigger pockets, Steve? I'll turn it back over to you.
I think we can probably leave that for another day. Like I said, we've come up on our hour, and we have a nasty habit of going on and on. So I think for good training, I think let's bring this one to a close. So what did we learn today? We learned Redfin can get you really close data if they've got the data for your market. We've talked about some of the things we're all hearing. That, are we at this frothy top? We've you've declared that you are not a buyer in San Francisco, and I think I'm a buyer in opportunistic buyer in LA, and we're both still committed to strong cash flow and good and not being too greedy on return. We're getting, I'm still using the 1% rule for rentals, and like I said, mortgages. Talk about reaching the top. I've suddenly got 4 foreclosures in the works from people that have been paying as agreed for years. So times aren't 100% everywhere. So anyway. So, any last minute burning desires from anybody out there? If not, I want to thank everybody for their time, and I appreciate you being here. And we'll be out next month. If there's something you want us to talk about, please send us an email. Tell us something that's on your mind, and we'll get it out for everybody to talk about. All right. Thanks.
And I guess, Steve, we're about 90 days from if this audience that attends the Masters of Real Estate.
Oh, yeah.
In November, we're only about 90 days away.
That's right, in Las Vegas. And there's also, you do remember, you and I went to John Schaub and Pete Fortunato last year. And they're coming back to South San Francisco, the 3rd week in October to go do it again. And so if those of you take a look up John Schaub, who promotes buying solid single family houses and never, ever, ever selling them, and Pete Fortunato, who loves to trade paper. So they make for a solid 2-day event. We have a question about can we discuss notes in San Diego? We're buying primarily Florida because we don't have the capital to buy $300,000, $400,000, $500,000 notes, and they also don't carry the coupon that we're seeking. I can tell you that the California note market, you're going to pay 85 cents on the dollar for something that you can pay 65 cents on the dollar for in another state. But then you have all those inherent other items. FCI Exchange is a good place to go and get a sense of what the local market, what the market is. If you're going out with a fund with significant funds and looking to buy notes, there are vendors out there that are happy to sell you note lists of typically seller finance deals. But I don't have a note in San Diego, so I can't speak to that market. I can talk about notes in 12 other states, which I continue to learn more and more about it. Even though we've been at this for a while. So and I see FCI, Frank Charlie I, FCI Exchange. Then we're also asking about Imperial Valley. It's you're likely to find more seller finance types of properties out there than so, than you would in San Diego. Although you get close to the border in San Diego, lower value stuff, you might find some things. But it's we don't broker. We don't broker. We sometimes sell notes out of our own inventory, and we've got a handful of those that are available. We're looking to buy again opportunistically, and we're working on stepping up our inventory from lower end assets to mid lower assets. So $100,000, $70,000 houses. I've had and we focus. We do a couple of different things. My mortgage pool are all first mortgages, but in our lending that we do for developers, we take second positions and thirds in loans. We have this little niche where we come in and help deals that are falling apart because they're running over schedule and running out of money. And we make high interest short-term loans, typically 3 months, 6 months, a year, to bring projects to conclusion. But we also fund. I've funded some foreclosure avoidance, and I've funded some earnest money deposit loans. Those of you that are looking to put money down on need to put money down on deals, we've funded those kinds of things. It's expensive in terms of interest rate, but if you don't have $5,000 to pay for to borrow 50 in a deal, then you probably shouldn't do that deal if it's so skinny that you couldn't afford a $5,000 fee. I see. We'll circle up with folks afterwards. You've seen Nick's email. So we're not using this as a forum to generate business. We're using this as a just to try to air out what we're doing. It helps us think better about what it is that's going about what we're doing if we say it out loud, and it also gives us a chance to stop working like mad for a couple of minutes and reflect on what it is we've been doing. I see a phone number up here. We'll give you a buzz tomorrow.
I'm gonna throw one quasi sale pitch in there though, just to say that we're part of a community here, and we all can win with the right perspectives and the right people at the right table. So we're always have our we'll always listen to any ideas or opportunities you have, and see if there's a way to partner together. We love partners. We think there's some very good strength in partnerships. And,
Nick, you and I didn't even talk about the deal that I just got some information on now. It's a $90,000 bridge loan. It's going to be short term, 3 months, maybe 4. It'll have a minimum 3-month yield maintenance rule in it, so the interest will get paid. It's quick in and out. It's the underlying asset looking to purchase doesn't have sufficient collateral, so the borrower is giving me cross collateralization against the rental property that he owns, and also against his employer stock portfolio, stock option. He's a tech guy, so he can't get at his company shares. But we're looking to see if, in fact, they'll be allowed to be pledged, and we of course would check with the company before we did that. Like I said, he's but it'd be a deal. It'd be collateralized with two pieces of hard of dirt and the stock, which is probably the best. And so the there's we were kind of trying to like do the crystal ball thing at the beginning, and we're really not. We're really not. You can see things are still strong. Prices are, but there's more and more people that that aren't buying today. Like you said, Nick, you're not a buyer in San Francisco today. But if you were in and out of a deal in 6 months, you would be, right?
I would. Absolutely.
Yeah. So
absolutely.
that's the difference.
Creative solutions like cross collateralization and with other assets is one way you get there as well.
Yep. Yep. All right. Okay. Well, like I said, we've broken past the hour mark. We're babbling like I expect this. This will be up on YouTube. Please share it with friends. Come back, review it. And it'll go out in the meetup list. I appreciate everybody hanging in with us while we did our usual struggle with our technology at the beginning. We'll be back to you next month. But if anything comes up in the meantime you want to talk about, we can't shut up. So just give us a call. All right. Okay. Thank you much. Everybody have a good night. Bye-bye.
Thank you.
Thanks, Nick.
Thank you, guys.
Thanks, everybody.